All right, good afternoon, everyone. My name is Joe Bicella, Director of Client Success here at Chaikin Analytics, and I'd like to welcome you to our presentation of the Ultimate Earnings Season ATM. Our presenter today is Sandy Chaikin, co-founder of Chaikin Analytics. Now, a bit about Sandy. With no prior experience, Sandy started investing in 2012 with Chaikin Analytics and has built a killer portfolio that outperforms the S&P 500 and most money managers. Sandy is living proof that you do not need to be a financial expert in order to pick winning stocks. She presents webinars and speaks at industry events on fearless investing by following the Chaikin 5-step method. Sandy is a contributor to NASDAQ.com, where she also hosts webinars on investing. Now, prior to co-founding Chaikin Analytics, Sandy had her own marketing and communications firm in a career that spanned over 30 years. She's held senior management roles for Elizabeth Arden, L'Oreal, and the Franklin Mint. She is a member of Elevate, a global professional women's network, and Women in Investing Network of Philadelphia. Now, throughout this presentation, please submit your questions using the Zoom webinar Q&A window. You can access this in the upper left-hand corner of your screen. Michelle Greenblatt and I will be available to respond to your questions. And don't forget that this webinar is being recorded, and we will be sending a recording to everybody tomorrow morning. Now, to go ahead and get us started with our presentation, here's Sandy Chaikin.
Joe, thank you so much, and thank you all for taking time out of your busy days to attend this presentation. So as Joe said, I have been investing with Chaikin since 2012, and most of the examples that I'm going to be going through today are from my portfolio, stocks that I either currently own or have owned. So I am really living proof that you don't have to be a financial guru like my husband Mark to be able to invest profitably and invest with confidence. But I know a lot of the volatility around earnings season gives people a little bit of anxiety and stress. And I understand that because earnings does generate particularly high volatility, both on the upside and the downside. But it can be your friend. And the purpose of today's presentation is to share with you how I've made it a profitable opportunity for me and made trading during earnings season actually a favorite season for me, I should say. So what's going on with the earnings seasons? Well, as you probably are aware, there are 4 quarters during the year, and the Wall Street firms, anyone who's trading a stock is required to report 4 times a year their quarterly earnings. Now, they're scrutinized by Wall Street analysts and professional investors, but what actually moves the price and causes the volatility is the actual earnings compared to analyst estimates. And that to me was a surprise, because I would have thought it would have been actual compared to last year or last quarter, but it's actually the comparison to the analyst estimates that's really what drives the stock prices. So it's critical that we have a sense of what the analysts are thinking and where they are headed with any particular stock that we're interested in. Now, the wild card in all this, though, is the company guidance, and Wall Street requires any publicly traded stock to project they call it forward guidance, so that they expect them or require them to look further out into the next quarter, into the next year, and evaluate where they think their progress will be, up or down. And that can be the real wild card, because there is absolutely no way an analyst or anyone else can estimate that. So that is the wild card. You know, there is a risk involved in trading or investing in stocks during this volatile period, because it can look like it's all going in your direction, and then if they come out with poor guidance, it can take back all those profits and actually go against you. So just fair warning, as in any investment in a stock, there is risk involved. But there are short-term trading profits, and that's what we're going to be talking about today. So on the positive side of volatility around earnings, you know, you can get big price moves, both up and down. You can trade them by going long on them or trading options if you're expecting that stock to disappoint. And the key to it, though, is really to anticipate if a stock is going to beat or miss the estimates. You know, again, it's the estimates that and the correlation between actual and the analyst estimate that's going to drive that price. So understanding that and having a kind of a view into that will really help you in your trading success. So the strategy I use is to try to identify the likelihood that that stock will beat or miss their analyst estimates. And it's enabled me to make some really nice profits. So my promise to you in the next hour or so is that you're going to discover how to take advantage of volatility, you know, so that you profit instead of stress out and take losses. So I think of earnings season as an ATM machine. You know, there can be some really nice profits, and the whole point of that is obviously to generate profit in order that we can not only celebrate but also fund our retirement. But it's important that we celebrate along the way and take some of these profits to enjoy what life can offer us. And Mark and I have enjoyed some really terrific vacations since I've been investing. We've been taking some of the profits out and going on some really nice vacations up to Turkey 2 years ago. We certainly wouldn't go there now, but two years ago, it was great. We went over to Istanbul for a wedding and then stayed along the Aegean coast for a week beforehand. Last year, we went out to Colorado, to Vail, for an international dance festival because I'm a big fan of the performing arts. And this past summer, we went to Rome. We went there in May. And again, all of these were paid for by the profits that I've been making with my investment accounts. So why should you listen to me in this next hour? Well, as Joe said on my introduction, I have beaten the S&P consistently since I started investing in 2012. And both the Wall Street Journal and Barron's have put out articles at year end saying that 4 out of 5 pros consistently have underperformed the S&P 500. So by correlation, by beating the S&P, I am also beating 4 out of 5 professionals. And this is all, you know, starting as a novice in 2012, where I can remember my first investment. I put $5,000 into eBay and $5,000 into Comcast. You know, and now I really have my entire 401k plan funded in stocks. So last year, I found some of these little known stocks: American Woodmark, which was up 98%, and Activision, which was up 94%, and that was months before Barron's wrote it up and everyone piled in and raised the price. This year, I'm in, again, some little known stocks. I find these little, I call them hidden winners, that aren't household names, but they've been able to generate some really big profits for me. CENTA is up 88% this year. Quad is up over 200%. And NACO is up 68%. These are stocks you've probably never heard of, but I hadn't either until I found them using our methodology and started investing in them. And I do this on 15 minutes a day, so I know we're all time starved. That is our new economy, is time. And I don't know anyone who says, oh, gee, I've got enough time. I mean, if you do, you know, type yes in the question box, the Q&A box, and you know, I applaud you and would love to know your secret. But most of us are time starved. So what we do needs to be efficient and quick and simple. And the methodology that I'm going to take you through is exactly that. So a little bit of backstory on me. I did start investing my 401k plan when I worked for Elizabeth Arden, L'Oreal, and the Franklin Mint, and continued investing in the mutual funds that they gave me a choice of, which actually did quite well. But as my career grew and my portfolio grew, I felt it was prudent to turn this over to a wealth manager, which I did in around 2006, I think it was. And then, of course, along comes 2008. We all know what happened then. You know, the whole meltdown, my account dropped by 40%. And because I had basically handed it off to this wealth manager, not feeling confident that I was smart enough or capable of overseeing it or being involved in the conversation, I basically went on his recommendations. And as I was calling him during 2008-09, saying, boy, everything is really dropping and tanking, don't you think we should sell? And his advice to me was, oh no, it's all going to come back, it's better just to stay the course. So lacking that confidence, I stayed the course, but I paid a huge price in that my portfolio lost 40% of its value. So that wasn't really a good way forward for me. And what I did after that was really say, I've got to take control of this and manage this as I've managed other aspects of my life, because nobody's going to care more about my money than me. And I do want to pass that learning on to you all to share that same common theme, that we really need to take advantage of our own financial well-being and be part of the conversation. Whether you're using a wealth manager or not, you want to be part of the conversation and not just hand it off as I did and pay that huge price. So what I did was I took the money out of the wealth manager's account and put it into a Vanguard self-managed account and invested it in the S&P 500 until I could figure out what to do. But that was that 2008-09 meltdown was a real kind of catalyst for me to say, boy, it's time to figure out how I'm going to do this. But now I'm confident. I'm very confident about investing. I'm not fearful. And this is what I want to pass on to you all as well. So let me just pause here for a minute and just ask of you, could you just tell me what are some of the challenges that you're facing today? Not just with earnings and the volatility around earnings, but just with investing in general. What is it that keeps you from, pulling that trigger on buying a stock or selling a stock? If you can just share some of your thoughts with me, that would be great. So yes, I am seeing, the uncertainty with the Fed. Michael says, how do I find or scan for stocks and options in today's market? Well, funny you should ask, Michael. I'm going to show you how to do that. Lisa says fear. Yeah, fear is always a big one. Not trusting the entry, says Tom. So entry and exit points, timing, right? And fear. How do you overcome fear, which is obviously tied to emotion? David says prices reacting to news. Yeah, let's kind of lump that in with basic volatility and information overload, because I think we're so inundated now with 24/7 news cycles. It's hard to know how to filter it, what's important, what's not. And Anil, knowledge. Yeah, that's exactly, where I felt a big lacking point was my knowledge. I just didn't feel I knew enough to manage my account, and thus I didn't. Michael, seems like we're walking the tightrope. Yeah, as you can see on the image, so many experts predict doom and gloom for the market. Exactly. So we all need an objective way to evaluate it ourselves. And that is basically the methodology I'm going to show you today. And Joel, one last one says here, when to take the profit in general. So yeah, absolutely. I.e. 10 to 5% also when stock spikes, how long do you ride it? Absolutely. So all of these challenges that you're giving me, are going to be answered in the methodology that I teach, because I'm going to be showing you not only what works for earnings season, but what works in general for profitable and confident investing. So the examples I'm going to be using are on the Chaikin Analytics platform, which is on desktop and iPad. And today I'm going to be using the desktop versions, but they both are interchangeable. But around earnings in particular, volatile markets demand what we call a disciplined methodology. So in other words, you can't base your decisions on fear or a lack of knowledge or what the news people are saying. You know, as so many of you have said on that question I asked you about your challenges. You know, you really need to follow a disciplined methodology, and that's exactly what I've done. So it's based on a 20-factor rating, which is called the Chaikin Power Gauge that my husband Mark created. And the story on this is that Mark was on Wall Street for 40-some years, creating indicators and tools for the professionals so that they could better manage their clients' money. And he sold a company to a division of Reuters, then retired. And after the 2008-09 meltdown, he said to me, you know, Sandy, you, like millions of others, have taken your accounts out of brokerage firms, traditional brokerage firms, and set up your own self-managed accounts, you know, like I did at Vanguard. But he said, you really do lack the knowledge. You don't know what you're doing, which I totally agreed with. And you don't have the tools. So he said, what I'm going to do is help you out, which was great. I said, that's great. I'll help you. You know, if you develop it, I'll help you market it. So that's exactly what we've done. And that's how we created Chaikin Analytics. But what he did was he created Chaikin Analytics with the centerpiece being this model, this 20-factor model. And I'll get into that in a little more detail, but that really is the centerpiece of our methodology, as well as signals, you know, which help time, as many of you said, were challenges, time, entry and exit points, and also some tried and true technical indicators that are part of the platform as well. So why should you trust this methodology? Well, we are used by many of the pros, many of the hedge funds, Soros and Paulson, for example, and many of the pros at Fidelity Investments, for instance. And we are quoted in the media. We've had articles written in all of these publications, as well as quoted frequently. Mark is interviewed frequently on CNBC.com. So here are the 4 steps that we're going to be going over today. And as I say, this applies to investing in general. So it's not just about earnings, but these are really helpful guidelines for investing in general. First of all, you've got to know a stock's direction. You know, whether you're trading in a stock, an ETF, an option or whatever, you need to know where that stock is headed, up or down. And you also need to identify what we call a classic bull or a classic bear. What is the classic pattern? What's the classic setup of a stock that is likely to outperform the market, and likewise that of one likely to underperform the market? And timing. You know, many of you said timing was an issue. When to get in, when to get out. I think it's easier to get in than it is to get out. Getting out seems to be a big challenge for most investors, but we've got some guidelines that can help solve that challenge. And then, of course, earnings. You know, the topic of today's conversation is whether you can evaluate whether a stock is going to beat or miss earnings, you know, with some reliability. So let's dive in now. The first guideline here was to know where stock is headed. You know, and again, this is based on the Chaikin Power Gauge rating, which is the stock rating model that Mark created after he retired and as he was starting Chaikin Analytics. He said, you guys need a directional edge. And I know what the Wall Street pros have used. They have the edge, you don't. But I'm going to give you what I've given the pros for years so that you can trade with the same tools that the pros have. So this was the Power Gauge rating. It looks very simple on the outside, giving a very bullish or very bearish rating, but there's really a lot going on underneath the surface. But what it does is it takes very complex information, as you see on the right, and puts it into very simple graphics, you know, as you see on the left, very bullish. I mean, if you tried to, or if I tried to read what was on the right-hand side of the screen here, there's no way I could know what it's saying or make any kind of sense or analysis from it or deduction. But looking at the screen on the left, it's very clear, this, at the time, this ATO is given a very bullish rating. And the rating looks at the stock's potential to out or underperform the market over the next 3 to 6 months. So think of it as a GPS for stocks. It's telling you where that stock is headed. Now, this model itself is made up of 4 basic components, and they could pertain to your methodology. For instance, financial metrics are factors that the value investors like a Warren Buffett may pay more attention to, whereas earnings performance are factors that someone like a Jim Cramer pays close attention to. What I do is look at the overall rating, first of all, and then I'll look at each of the 4 components. But other than that, there's really, I don't drill down on any of the 20 factors. There are 5 factors within each component, so there's a total of 20 factors. And it took Mark a year or so to kind of test all of these out of a universe of 200 and some factors. But what he found that these 20 were the most reliable factors to indicate a stock's potential over the next 3 to 6 months. And these are the 20 factors that the pros use. Now, if you had to go research these for every stock you're interested in, God bless you. I don't know where you'd even go to find them, let alone read the analysis and know what it means and then put it all together. But the Power Gauge rating literally does that in seconds. So even though it looks very simple, it's a very complex algorithm taking these 20 factors and putting them all into a model and then coming out with a very bearish to very bullish rating on a stock potential. Now, I've highlighted a couple of these things in red. The price to sales, short interest, and insider activity are the 3 factors that I really drill down on when I'm looking at buying a stock. Price to sales is important because it's really the ratio that compares a company's stock price to its revenue. So think of it as an indicator of the value placed on each dollar of a company's revenue. And a lot of high-flying stocks have been really overrated price to sales. And then when something happens they come out with a bad earnings report or whatever, they really tank mercifully, with no mercy is what I'm trying to say. Short interest. Those are the short sellers. Are they shorting a stock? If they're shorting a stock that I'm interested in looking at, I don't want to be buying that stock because the short sellers are considered the smartest guys on Wall Street. They'll only short or basically sell a stock before they own it because they think that stock's going to go down. I want that rating to be bullish because that means they're not shorting it. And insiders, really you have to think about insiders. Who knows more about a company than the insiders? Think of this latest Wells Fargo fiasco with all the phony accounts they were pressuring their salespeople and portfolio managers to set up. They knew what was going on. If I had worked for Wells Fargo, I wouldn't be buying that stock. But we didn't know until, a week or 2 ago. So you think the insiders really have more knowledge than really anybody. So if they're not buying a stock, that gives me pause. So I prefer that to be bullish as well. So those are the 3 factors that I like to see as bullish when I'm considering buying a stock. Other than that, I really just look at the overall rating. Ideally, it's very bullish, but if everything else lines up for me, I'll also consider a bullish stock to buy. And this applies ahead of earnings too. If I'm going to buy a stock and going into an earnings season, it's also critical that it has this type of construction to it. Now, I've also highlighted the earnings performance category because that in itself is really helpful in anticipating whether a stock is likely to beat or miss the earnings. And that also drives, in the expert opinions, the earning estimate revisions. So you see they kind of overlap each other, but you can really drill down to some pretty strong, minutia here to get a deeper read on any stock that you're interested in. So let's see how this plays out. So I've put up here now an example of a stock chart on our desktop platform. And I've highlighted the earnings component of the power gauge rating. So I've dropped down the rating on Gibraltar Industries, the stock I own. You can see that it's rated overall very bullish. But then I said, well, show me what's going on with earnings. And as you can see here, the earnings component in general is rated very bullish. And it's because it has very bullish earnings growth, very bullish earnings surprise, neutral earnings trend, bearish projected price earnings, and very bullish earning consistency. So that gives me confidence going into the earnings reports, which you can see up here. They report October 27th. That gives me confidence that they're likely to beat their estimates and spike up. When a company beats their estimates, and as you can see here, the EPS in green means they beat. Look at the spikes. This tends to happen. You can see some really nice, anywhere, 5, 10, 20% spikes on a stock after they report. And that can be a really nice time to take your profit, to take your profit. So another little plug here for depending on a methodology and a model as opposed to our emotions. James O'Shaughnessy is a well-known investor and quant analyst. He says models beat human forecasters because they reliably and consistently apply the same criteria time after time, as opposed to human beings who are swayed by emotions and opinions and fear. I just added the fear because that was mentioned earlier. So it is important to have an objective viewpoint as opposed to our own opinions or somebody else's opinion. And a little bit of testimonial here from one of our partners, John Carter, who's a very well-respected stock market guru. He calls the Chaikin Power Gauge rating an objective awesome meter for stocks. He says there's a lot of hyped up tools out there, but a single tool that combines 20 technical and fundamental factors to anticipate a stock's profit potential got my attention. Most platforms or charting packages either go with technical analysis or fundamental. There's aren't too many that combine the two, which our model does. So reading on, John says it's called the Chaikin Power Gauge Stock Rating. At first glance, I thought this looked like an objective, awesome meter for stocks. And I like that it includes fundamental and technical analysis for stock selection and timing. To give a little more street cred here, we've partnered with NASDAQ and First Trust, where we've created indexes based on the Power Gauge rating. These NASDAQ indices are now going to be licensed by a major player on Wall Street. It's under wraps right now, but it's very exciting for us. And First Trust also has asked us to create indexes based on the Power Gauge rating, which we've done. And these new Chaikin indexes consistently outperform their benchmarks. So is it okay to move on to step 2, identifying a classic bull or bear? I want to make sure everyone's on board with the Power Gauge rating because it is the foundation not only of this step, but really the whole presentation. So if you can just type into your Q&A box, yes, 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 I'm seeing lots of yeses. It's great, thank you. Okay, awesome. I will move on. So we call it classic bull or classic bear. And again, you need to know the direction a stock is headed, whether you're purchasing that one stock, whether you're putting an option on it, whether it's part of an ETF, etc. and especially before earnings. You know, you need to know, have some level of confidence of where this stock is headed. We base that on these 5 things. And I'm going to be going over these as we get into the examples. But, you know, a classic bull has to start with a strong bullish Chaikin power gauge rating. You want it to be price trending up, as you can see in this example here. You want Chaikin money flow to be strong, you know, which is this kind of mountainous indicator here. And relative performance, this is how well is this stock performing relative to the S&P 500. You want it to be outperforming the S&P, because if it's not outperforming, why bother? I mean, that's the benchmark I judge myself, and most investors judge themselves against the S&P 500. And if you just want average performance, you're better off buying a S&P index fund, you know, which have averaged, you know, 10% a year over the last 20 years. That's not bad. But if you want outsized performance, then this is a methodology you can embrace and follow. And a strong industry group. And I'll show you a little bit more detail on each of these examples as I go through it, how I know to find that. All of that is found in Chaikin Analytics. So let's look at a stock that I bought back in May, a little stock called CENTA. It's pet foods and lawn care. And I bought this stock back in May back here, and I bought it at this point because everything was lining up green. Okay, let's break this classic bull down on CENTA. Power gauge rating is this ribbon along the bottom. As you can see, since pretty much March of this year, it's been bullish. This is the relative strength, this heat map here. So it's telling me that since May, CENTA has been outperforming the S&P 500. This mountainous region here of lots of green is money flow. This is really where Mark made his name on Wall Street some 35 years ago by creating this technical indicator to tell investors how much money is coming in or out of the stock by the professionals. So this measures the professional money coming in and out of a stock. If you're buying a stock, you want the pros to be on your side because they can move the prices as well as earnings. Earnings can too, but the professionals have a big, and they're buying or selling, can have a big impact on the price of a stock because they're creating the supply and the demand through their large share purchase or share sales. So I want that to be green as well. So this is what we call a classic bull. You see green money flow, green relative strength, and green power gauge rating. And you can see what happens when they all line up. The stock price starts moving up. And this is why we call this a classic bull, because it also has this stock momentum moving up. This orange line here is a 200-day average. So this is the average price. As you can see, it's still going up, which is a good thing. And industry group, I will show you on the next slide how I know to identify strong industry groups. But we rank them in our system, and then we have a screener that makes it really easy to find them as well. But this stock chart is telling you the industry group is strong. So I bought this, going back to using this as an example of how and why I bought it. I got this triangle, which is a signal, a buy signal. We have 6 pairs of buy-sell signals. I can only overlay one at a time to show you, but in real time, I can see a lot more going on. But for this static screen, I have to put one. So I overlaid the momentum breakout, which is what triggered back in May, and gave me the kind of the alert that said, hey, this might be a good time to buy this stock that I had been watching. So I did. And then in here, unfortunately for this stock, we don't have earnings data. We get our data from Zacks. You can, if we did, it would be up here. Zacks does not have the earnings data on this, but I knew from the news when they were reporting, and they reported back in here, and they spiked up. So after they spiked up some 12% on this earnings, and on SunTrust coming out with a buy recommendation, I sold it. It hit this upper volatility band, and that can be a good kind of indicator of saying, hey, you might want to take your profit because it's up higher than it's typically been. So I thought I was making a wise decision to sell it up here on a spike. But then I really liked this stock, so I put it back on my watch list. And I really liked this strong money flow. And you can see when everything is so strong like this, you know, this stock just kept continuing to go up. So I put it back on my watch list, and I ended up buying it back in here on a pullback the end of August, a little bit higher than where I sold it. But I'd made 12% back here, you know, and I bought it back in here, and the stock is now up another 12% since I owned it. So that's really how I evaluate when to get into a stock, as well as, you know, what helps me know when to get out. This overbought, oversold indicator is very helpful as well to identify timing. You know, many of you said timing was an issue. I understand that. I think timing is a difficult issue for most, but this can be really helpful in addition to those signals, because you want to be buying a stock when it's dipping down. I mean, no stock goes straight up in price like this orange line. It does all this zigzagging business. So this helps kind of chart the zigzagging. You want to buy it when it's down, dipping down. You want to sell it when it's up here. And as you can see, that's what I did. You know, here I bought it when it was dipping down here, and I sold it when it was you know, peaking up at the top. And then when I bought it back, you know, I waited for this pullback. This can take 3, 4, 5 days to kind of cycle through this. But you can just wait, you know, wait rather than buy a stock, say when it's up here, you know, just wait for that pullback, because you will get that pullback. So how do I find these stocks? Well, I told you we have this screener that we incorporated in the, this last fall. It was almost a year ago, I think. And this doesn't look very sexy, but I love this screener because this has really cut down my research time immensely. I can get in seconds the stocks that meet my criteria, which are that classic bull, plus those 3 factors that I told you about that I like the power gauge rating to be bullish on. And I can do this in seconds. So I can tell the screener, and I have this already preset, so I can go into my workstation and basically get this overlay in a second and get an update in a second. But I tell it to give me only the stocks in the strongest industry groups. So I already know that the stocks that I'm going to be looking at from this screener are going to be in the top 20%, because that's what it culls. So it immediately takes the universe of 5,000 stocks and gives me 856 stocks. And then say, give me only the stocks that are rated bullish. I'm down to 422. I plug in those 3 factors that I told you I zero in on. And to be a classic bull, it needs to have a strong money flow and strong relative strength. Now, recently, I've been screening for small and mid caps because they've been outperforming the large caps. So I put that qualifier in there as well. And literally in about 10 or 15 seconds, I've gone from a universe of 5,000 stocks to a universe of 20. And I can then put these into a list like this. And then I can scroll through each of the stock charts that you see here. And I can save this list, so I can access this list anytime from my workstation. So I'm using June 22nd, because that was right before the Brexit vote, if you recall. The Brexit vote was on June 24th, and there was a lot of volatility around that vote because unexpectedly Great Britain voted to pull out of the European Union. take their currency back. And that caused alarm across Wall Street and uncertainty causes fear, and fear causes selling. So there was a lot of selling. There was like 5 to 7% selling on the day or two following that vote. So right beforehand, I had run this, and I'd put a number of these stocks on my watch list. So I was just waiting for the right time to buy them. And I'll show you let's use quad as an example. But I embrace what Warren Buffett says when he says that investors should be fearful when others are greedy. And what does that mean? When you're fearful, you sell. And when others are greedy, they're buying. So when other people are buying, what he's saying is that you should be selling. And greedy, only when others are fearful. So he's kind of saying the reverse. Greedy meaning buying when others are fearful. When others are fearful, as they were at Brexit and were selling, he's saying use that opportunity to buy. And that's exactly what I did. So let's look at another classic bull here, which is quad. This is a stock that I'd had on my watch list because it actually had been on an earlier screener prior to that 622 screener. So I had it on my watch list, and along comes June 24th, and you can see this drop here. It looks like it dropped about 5%. And it also triggered a buy signal for me, a momentum breakout for me. So I thought, oh, this is a really good stock. Everything meets my criteria. I already knew those three factors were bullish because otherwise it wouldn't have been in the screener. I already knew that industry group was strong because otherwise it wouldn't have been in the screener. And I already knew everything, power gauge rating, relative strength, and money flow were strong as well. So everything lined up beautifully. Plus I got this nice 5% pullback and a buy signal. So I bought with great confidence. I was greedy when others were fearful. Everyone was selling. Not everyone, a lot of people were selling, including institutions. But this setup here gave me confidence that this stock had a strong potential to outperform the market. And that's exactly what it's done, as you can see. I use this little drop-down menu here because you can see intraday prices. We've recently added that, and that's a really big help, particularly on a day like today where there was so much, I call it zigzagging, up and down and all over the place. You could see exactly what was happening on a given stock in any particular day, which I really like. We've also added these news features. I used to have to go to like Yahoo Finance or NASDAQ for news articles about a stock, which I would do, before I would pull the trigger. I'd check out any news that might affect the price. Well, now they're all nicely right down in here. You're telling me discuss third quarter results. That would give me the date when they're going to be reporting, which is November 2nd. So from that, even though Zacks doesn't have the earnings data on this, I know the stock is going to be reporting November 2nd. So it's really helpful just to have this a click away. Again, a big time saver in a universe where we're all time starved. So I bought this stock on this buy signal when it pulled back at 21. And, as I say, the green gave me the conviction and the confidence to buy it when others were fearful and to continue holding it. Now you can see the money flow's gone a little bit negative here. But power gauge rating is still strong and relative strength is still strong. So, I'll see what happens, but I have a feeling that going into earnings on November 2nd, that this could exceed analyst estimates and, be a winner for me. So we need an edge. Tom Gentile with Money Map Press is another partner of ours. He says, gain the edge needed for trading success. He says, as a rules-based trader in both stocks and options, I rely on quantitative analysis to give me the edge needed In trading, Chaikin delivers something that very few software tools do: the ability to have superb charting capabilities, but also marks proprietary algorithms not found in standard charting software. I highly recommend Chaikin to anyone who's looking to gain the edge needed for trading success. So let's look at classic bears now. Are you all with me on the classic bull? Because the classic bear pattern is basically the reverse of the classic bull. So instead of a power gauge rating with all of their news about the tainting of food and recalls and store closings, it's just been kind of one problem after another. But the power gauge rating has been negative long before that. Relative strength has been underperforming the market over the last year. And you can see with these big, mountains of money, professional money coming out of the stock, that didn't help either. So this is what we call a classic bear. And by overlaying the earnings calendar on it, you can see they did do okay here. The last one, by being red, they disappointed. And by this red exclamation point here, this is saying that our work tells you that this is going to disappoint as well. And they report October 25th. Now, they've also triggered a reversal sell signal on this stock today. And then I overlaid the overbought sell triangles on here as well. So there's a lot of ammunition in here telling you if you own this stock to get out of it, or what a lot of our subscribers have been doing has been trading put options on these classic bear patterns. So let's go to another example. Here, what I've done is I dropped down the earnings because DSW, a store that I love to shop online for shoes. I love to shop for shoes online, but I'm certainly not going to buy the stock. And looking at the chart here kind of gives you the reason why. It's been a bearish power gauge rating or neutral for a good part of the last year, underperforming the S&P 500. You've had some strong times where a lot of money has been coming out of this stock. And you can see what happens, particularly recently, when these three all line up in the negative zone, the price, falls dramatically as a result. So this really does give you the edge, putting all this information together in one place to really have a pretty reliable view of where a stock is headed. So we know this stock is reporting earnings on November 22nd. From the drop down, I dropped down the expanded view of the power gauge rating, which you can do on any of those four components. I dropped it down on the earnings component, which is very bearish as well. As you can see, most of those factors, including consistency, earnings trend, and earnings growth, have been bearish on this stock. So this certainly isn't a stock I would want to invest in for the long term. But I suspect some of our subscribers are going to be considering it for options trades. And that's exactly what Harry has done here. As a new subscriber back in February, he gave us this testimonial after 2 weeks of being a subscriber that he was up over 17,000 with his options trades on Google, Amazon, and Priceline, which were all bearish at the time. It's all from checking the Chaikin power gauge rating. Chaikin's a godsend. I've been a subscriber for not even 2 weeks. You've changed my life. And Harry continues to give us great testimonials to his successful trades and investments. Okay, so we're going to move on to the next the next category, I guess I should say, the next key to success, knowing when to buy and when to sell. So I've been referencing the 6 pairs of buy-sell signals that we have that are outlined here. They're also broken down on our website with a description of the criteria that triggers each of these to trigger. But you might say, well, how do you know where to find them? Well, what we have is, we call it an alerts view on any list. I keep 2 lists. One list is of stocks that I own called, my stocks, which is right here. The other list that I review daily is what I call my watch list, which you can see is highlighted down here. And by putting the alerts view, just clicking on the alerts view on any list, I can do this on the S&P 500, I can do this on an industry group, I can do this on my watch list. As you've seen here, I did this yesterday. I can see what alerts it's giving me that are actionable that may affect the price of this stock. So it's telling me I've got buy signals on these 3 stocks. Let's drill down on the momentum breakout buy signal and see what that's showing in terms of a chart. But before I head there, it also gives me, in addition to the buy-sell signals, this alerts view gives me power gauge rating changes, estimate revisions. I mean, these are really valuable things to know about going in to earnings season, which we just started this week. So I'm glad to know if any of these stocks that I'm watching have an analyst estimate revision, because as we know, that can drive a price up or down big time. Likewise, you get the same on the negative side. But let's look at WellCare, because that's a stock that I've been watching. So looking at this now, I know it reports November 1st. I've overlaid the earnings, so I'm getting the dates that they reported. And by the green, it means they exceeded analyst estimates, and you can see what's happened. They did spike up about, 10 or 15% each time they reported. So that's a good sign going into November 1st. And it looks like by that exclamation point that our work is giving us a bullish outlook for this earnings report. I know it has a very bullish power gauge rating. It's still in a strong industry group. And let's look at the classic bull setup, which it has. It's been bullish power gauge rating since February. Also since February, highly outperforming the S&P 500. And for the most part, there's been professional money coming into this, which has, those 3 things combined have accelerated the price momentum. So everything's going in my favor now. And plus I know the stock has gone up 48% year to date. So I don't currently own this. This is on my watch list. And I will look at this more carefully to buy it before November 1st, but I'm going to wait for this indicator here, this overbought, oversold, to dip down, because I want to buy it on a dip, like down here, which would correlate to this. I don't want to buy it when it's up here, certainly when it's bumping up against its volatility band up here. That's telling me it's probably an all-time high. That's obviously not where I want to buy it. And since I have time, November 1st is, 2 weeks away, I can wait on this and wait for that pullback before I consider buying the stock. That's kind of my thinking. I would also go into these news articles. It's on an article about the 7 best healthcare stocks to buy now. And then you can see, Zacks has featured it on different articles they've put out as well. So I could link to those articles as well for validation before buying. So I'm doing a little drop down, or kind of an expansion rather, on the earnings capability. Let me just go back 1 second. I'll show you what this did. So let's take this, where I've got this yellow, And in the live platform, when you click on this, this is what you see. So I did this on Gibraltar. But this drops down a little bit more detail. It tells me it's reporting what they did a year ago. The trend factor is very bullish, so it's telling me Quad has a very bullish outlook for this next upcoming earnings season, and tells me when they last reported. So it gives me kind of everything in a little snapshot right there. And here is rock as a chart. So what you just saw was this drop down from up here. What I'm showing you now is the drop down on the earnings, because the way I'm thinking, I go, okay, so what's the outlook for the upcoming earnings, which is 2 weeks away? Well, it's very bullish. And a lot of these factors are also very bullish, except for projected PE, which is very bearish. So let's look at this a little bit further from a classic bull perspective. Power gauge rating has been bullish since February. Relative strength has been outperforming, and there's been nice money coming in for the most part. So this had been on a screener. You know, I bought it again on this Brexit vote, right in here. And then I sold it up here after they reported the last earnings, and they spiked up. You can see they had a nice spike. I didn't hold it all the way up to that spike, unfortunately, but I sold it right around in here, you know, at 34. So I took a nice 12% profit in 5 weeks. But then, like Quad, I said, you know, it's a really good stock. I kind of wanted to put this back on my watch list because I might want to get back into it, which is exactly what I did. I had this buy signal here, and shortly after that, about a week after that, I bought it on this pullback back in here. So I currently own this stock right now, because I bought it a second time at around 36. And as I say, they're going into earnings. They have a strong outlook going into earnings, and they've outperformed the last 4 earnings reports. They've exceeded analyst estimates and spiked up. So looking at this chart, I feel I have a good reliability that that's what they're going to do yet again on October 27th. Let's look at another earnings stock and how I've evaluated that. This is Knoll. This stock had been on my watch list. Again, through, you know, found it through the screener, put it on my watch list. And if I scroll through those watch list stocks that are bullish or very bullish every morning, that's, you know, that's kind of my 15-minute routine between doing it then and in the afternoon after the close. It's still, it's now in a weak industry group. It was in a strong industry group when I bought it, and I bought it back here in April. And you can see what happens when everything lines up. Again, power gauge turning positive in early March, waiting for that relative strength to kick in April. And also look at what happens with this strong money flow coming in. You know, and then you get this nice price momentum, and that's exactly what happened. So I go through this watch. Go through my watch list every day. I went through it on April 21st with the overlay on earnings, so I could see, like, oh my goodness, this stock is reporting earnings tomorrow, and look at this fantastic setup for me. Everything's going in my favor. It is overbought. So ideally, I would not have liked to buy it up here. I would have liked to wait for it to come down here. But when you've got an earnings date the next day, can't be picky. So I said, okay, I've got everything else going for me. I'm going to buy this stock because I think this stock's going to outperform on the earnings, and that's exactly what I did. What happened? So they did sell it, you know, and then I took my profit overnight. You know, I just rode that spike up, took the profit, said thank you very much. But then, as I'm apt to do, I did buy it back. Typically what happens after a stock has that kind of volatility and spikes up, they tend to pull back. So you can wait for that pullback to buy them back if that's what you're inclined to do, and that's exactly what I did. I got this buy signal, relative strength buy signal, a few weeks later, and I bought it back down here for less than what I sold it for up here. And then what I did is they went through another earnings season, and then I sold it up here. Now, why did I sell this, okay? I could have sold it up here on the spike, which would have been great, but I didn't do that. So power gauge turned neutral back here in mid-August. And then you can see that the money flow ticked into the negative category as well. So when those two things happen, that gives me an indication that, hey, you know, things might start breaking down. I think I'd better take my profit and get out, you know, which is exactly what I did. So, you know, I sold it and took a nice profit, you know, 9% profit here, second time around, and said thank you very much. Now, I'm glad I did that because you can see what happened. This stock is breaking down. Power gauge is now neutral, relative strength is underperforming, and there's money coming out of it. And look what's happening. So thank goodness I had sold it. I wouldn't want to hold this stock going into earnings on October 20th, but twice I was able to profit from the stock going into and benefiting from the earnings volatility. This is a stock last year. This is a 2015 chart, but I use this because it's really a great example of when to buy and sell and when to take advantage of earnings. So I bought this stock back in April of 2015 down here at 54 on this buy signal. You can see everything was green. And then they reported earnings here and spiked up nicely. So I bought it, I sold it rather, up here on this green arrow when it spiked up on the earnings. I said, thanks very much. I'm going to take my profit of 25% and be happy. But then, as I'm apt to do, I put it back on my watch list because I thought maybe I might want to buy this back, you know, on a pullback. So I had it on my watch list, and I bought it on this pullback here when I got this buy signal. And then what happened again? It went into earnings, spiked up, and I sold it again. It spiked up about 20% after it reported earnings, and I took my profit and said thanks. So can you all see yourselves doing this? I mean, am I making it clear on these charts how easy it is to see these patterns and to take advantage of them? And with all the information, we didn't have the earnings overlay at that time, but I knew from the news when my stocks were reporting. So, and since I watch them every day, I see what happens when they spike up or not. But let me just pause here a minute because I want to make sure you're all on board with this and able to follow these patterns yourselves, because the point of all this is for you to be able to do this yourself. And believe me, you can do this yourself. Tom's saying, have you had examples where things line up and the stock doesn't cooperate? Yeah, I have. Recently it was Miller, MLHR, I think it was, where it had a green, you know, everything was green, but they went into earnings, the whole category, home furnishings, disappointed. And the stock pulled back 9–10%, and I sold it at a 10% loss. So yeah, they're not all, not everything works in your favor. It's not a perfect system, but you know, for the most part, this has steered me in the right direction. I don't expect it to be perfect 100% of the time. So I know there is risk involved in trading in general, and particularly trading during earnings season, but I'm willing to take that risk because I feel my risk is minimized by the opportunity to look at a chart like this. So let's look at where the stock is today, since that's last year's chart. Okay, this is this year's chart. It's reporting November 22nd. And I'm dropping down this earnings component for you. The power gauge rating is now neutral. This is that last trade from 2015 that I made where it popped up to 90. And I sold it up here. The stock is now at 70, or is it 79? So you tell me, what do you guys think about this stock? They're reporting November 22nd. Here's the earnings component. It looks very bullish. Most of those factors are bullish or very bullish. Tell me what you would do. Yeah, if you'll just chat into your box there. I'd love to hear your feedback. Okay, I'm not hearing from you. Al's saying, is the earnings overlay available on your platform? It's available on the desktop platform, on everyone's platform. Okay, so Eric, brave soul, thank you for responding. Eric saying money flow is lowering, so we're pass. And JT says he's finding a different trade. And I would tend to agree with both of you guys there. It's just a little bit too risky, even though you know, the earnings component is, oh, wait a minute. Ahead of myself. Even though the earnings component is positive, this makes me nervous, all this money coming out, and it's a neutral power gauge rating. So I agree with you guys. I would pass on this. Okay, let's look at one last example of benefiting from earnings. Citrix. This is a stock I bought back here at 77 at the end of March. And they were going into their earnings. They spiked way up. I sold half of it here, and then I sold the second half after it reported a second time. So that was an 18% profit in here. And again, the reason I sold it the second time was because it hit this higher up volatility band. Think of this as a channel. And aside from an earnings spike, this is where you really want to see the price. This is where you're most likely to see the price staying. So if it bumps up against this upper band like it does here and here, it tends to be a good time to sell. Likewise, and take your profit. And likewise, if it comes below it, this could be a warning sign as well to say, hey, you might consider buying this. Selling this rather, and see what happened. The stock did in fact break down. So I'm glad I sold it up here because now it's neutral, underperforming the S&P, and there's money coming out of it. So this is not a stock I would want to own going into October 19th earnings. So I hope you guys can see yourself doing this now, yourselves. Our subscribers get earnings alerts like this. I took this from John Schlitz, who's our market strategist. He puts out a morning, what we call morning insight every morning on the state of the markets, what they've done overnight. And he always gives specific stock ideas, both on the buy side and sell side. And he featured this one as a strong candidate going into earnings on October 25th with these two buy signals. Everything's lining up very nicely here. Excuse me, it's oversold, it's dipping down. You know, this is also a good candidate to think about going into their earnings on October 25th. But these are the type of ideas that our subscribers get every day. So a few more testimonials from Mark, saying that he had a 90% average return in his first 6 earnings trades using options play and the earnings features. I haven't had time to share with you the options, but Joe gives our subscribers weekly presentations on how to use options play every Tuesday and Thursday, which is an overlay we have on Chaikin Analytics. And as you can see, Mark's used it in conjunction with the earnings overlay. All very simple trades, make the process fast and efficient. So instead of getting bogged down in due diligence, I was trading. So that's what it's all about, is making your decisions fast and easy for you. So let's just recap the 4 steps that we've gone through. One is it's important to know whether you're trading earnings or not, or investing long term, you need to know a stock's direction. We identify the classic bull or classic bear pattern to help identify whether that stock is likely to out or underperform the market. The timing, when to buy and sell, are facilitated by the signals, those little green and red triangles, as well as the overbought, oversold indicator. And whether a stock is going to beat or miss earnings has a lot to say about the volatility surrounding that stock and the price movement short term. And that is all facilitated by those earnings overlay screens. So I made a promise to you in the beginning an hour ago that I'd show you how to take advantage of volatility so you can benefit and start thinking about where you'll spend the profits you're making from Chaikin Analytics. You want to have something in mind so that you have something to work towards. Rex here followed the Amazon trade, and his profit covered next year's total cost of 2 months in Hawaii after taxes. So Rex has had a lot of very successful trades since then with Chaikin Analytics, and his wife and I say thank you. So we want you to be our next success story, and you can do that by using what we call the Financial Freedom Fast Track, powered by Chaikin. But we've added the screener, as I've showed you, the options play, which I've alluded to, and certainly the earnings features, and I showed you also that intraday chart. So there's a lot of bells and whistles on it, some of which I didn't have time, many of which I didn't have time to go through today. But when you subscribe, Joe and his team will take you through as early as the next day what we call an onboarding process, where they'll walk you through exactly how to use it, how to set up your watch list, how to utilize those buy-sell signals, how to use that earnings overlay. And so as the webinar special for attending today's webinar, we're taking $200 off, giving you 72 hours to respond to that offer. But I'm going to make it a little bit sweeter, so stay with me if you will. Included in that annual subscription are the options play overlay, which gives you specific option strategies. Market insights is something I haven't had a chance to talk about today, but this is an enormously powerful report Mark puts out every Sunday night to our subscribers, giving them his insights, from his 45 years on Wall Street. He's been dead on to the last 3 years of his doing this, saying where the market is headed and what to do in the short term as well as long term, and specific buy-sell ideas. These coaching calls, I highlight these because I think these are really an extraordinary part of the package, in that when you subscribe by midnight tonight, as I said earlier, you'll be put as early as tomorrow into an onboard session so you can get familiar with the workstation and how to set yourself up. So you could be investing with Chaikin as early as tomorrow. And if you need more tutorials, and you're welcome to attend unlimited number of those coaching calls, but if you want a one-on-one where you have specific questions about how to integrate your investing style, we're available to set that up and schedule those one-on-one sessions with you as well. And then every other week, we have specific subscriber-only sessions where we walk you through new features of the workstation, how to use them, or what's going on in the market this week, today, whatever. So a couple of more bonuses. I've highlighted the earnings alerts. That's what we've been talking about today. This morning note from our chief market strategist, where you'll get the insights on buy ideas, as I showed you on that chart, and intraday charts, so you can see actually how the price is moving during the day. So I think this is the last testimonial here by John Malden, another one of our partners. Very well-respected financial expert in the industry. He says his analysts are enthusiastic users of Chaikin, use it to analyze the trades and recommendations of our writing team, giving them feedback and insight into their own ideas. They have a mailing list of over 1 million subscribers that they mail to, and they've integrated Chaikin into those ideas. So Mark's system has been integrated into our routine due diligence process for vetting and evaluating potential investments. So the pros have taken note of Chaikin as well and are using that to vet their own ideas. So I said I'd be offering a sweetener here. When you stay till the end of the presentation, take an additional $100 off. So you can have this annual analytics package for $1,650. That offer, that special offer, is for those of you who take action right now tonight and respond and subscribe by midnight tonight. So with that, Joe, I'm going to turn this back to you to close out the session. But I want to thank you all for attending, staying on with me, and best of luck to you in your trading and investing, particularly during earnings season.
All right. Awesome. Well, thank you so much, Sandy. And as for everyone, thank you very much for attending our presentation here. Just to show you how easy it is to join Chaikin Analytics, we went in and chatted out the link, the access link for you to take advantage of Sandy's offer here, $1,650 for a full year to Chaikin Analytics. So if you go to chaikinanalytics.com/Sandy, again, you can access this in the chat room. You'll find the order form with the $300 discount already applied, but that is only if you do apply by midnight tonight. So what we'll do is we have one more day this week before we wrap up for the weekend. We want to get you on an onboard session. This is one of those exclusive webinars that we host just for our Chaikin subscribers, where we'll go ahead and walk you through each of the pieces of our platform, each of the features and functions, helping you find the right opportunities using our screener, as well as making sure that you can assemble a list for top trending stocks. So with that in mind, thank you all very much for everybody for attending. Don't forget that we have recorded this session and we will be sending this out to everyone tomorrow. But again, in the meantime, make sure to take advantage of Sandy's offer here. So everyone have a great night. Thank you for attending, and we will see you tomorrow.